Hi everyone, welcome to YX Insights. Today is a special market update. It's our first time doing this. This is a recording, so it's not live. It's Friday, 27th of September. We're recording this around 2 hours after the market opened. So let's just go through a couple of housekeeping items before we move on to the market update. I think going forward, the webinar series potentially will change its format. So instead of having a very long webinar at the end of the day on a Tuesday, I will likely produce a series of smaller videos that have dedicated topics or commentaries. Some may just focus on technical analysis, others may focus on the FOMC or CPI, etc., more on the macro fundamental levels. So this is just so it's easier to digest. It's more flexible. People can watch the recording in their own comfortable time, and it helps us move along the week without bottlenecking market developments. How often and exact timing of those recordings will depend obviously on if we have major market updates that need to be talked about. And also it depends on my own personal circumstance as well, because I live in the UK, which is 5 hours ahead of New York. And it depends on how I can schedule my day around talking about the markets versus writing commentaries and research notes that you receive. So with that in mind, let's go ahead to today's market updates. As usual, we're going to talk about the key stock indices, Bitcoin, Ethereum, gold, silver, as well as the Magnificent 7 stocks, and of course the bond ETFs as well. All right, let's jump in. So SPY, not a lot has happened since our Tuesday update. The market is still pushing towards this wave 5 high, after which I do expect some sort of pullback from this wave away top. And I think towards the end, we still can or early next year, we can still get towards this 600 plus target in wave circle 3. But I do think there should be a pullback at some point in the near future once this wave circle 5 completes. And I think October typically is quite bullish, but in election years, there's strong headwinds going into the election. And I will pull up the election year seasonality charts next week in the next week's webinar. Moving on to QQQ, I think wave 5 it has enough to count as topped. So potentially we could have started wave 2, but it's quite early days. We need to see ideally 3 waves down on the micro level to start thinking that this is we're having a pullback. But yeah, so again, medium-term direction is still further up. I think we'll definitely break above 500 again, but near-term, we should get some sort of pullback in wave 2 pullback from here. Overall, from September low, we had a 5-wave run-up, 5-wave run-up, which is very bullish. TLT, so this is a long-term view. I still think we are going to move towards wave wave 3, bracket 3 here. But just looking at on an hourly level, we're not quite there on the wave 5. We definitely have, broken below the wave 3 low. Potentially wave 5 could have ended. Not quite enough evidence to suggest it. So meanwhile, I think the yields are still coming down slightly. And I think the next bounce will be a B wave bounce. So I think it would be something like wave A, B, C towards 95. And I do think 95 will be a decent level to get in for the long-term trade. and just looking at proportionality wise, we get something like wave C is the 1.236 extension of wave A from the wave B high, and this wave B will be something like the 0.786 retrace. It might not get as high as that. It could get to about 100, which is 0.618 retrace. But yeah, so these are my primary expectations for the weeks or next couple of months. You might think it's a bit crazy. I can just do the freehand with the perfect Fibonacci levels. It's just because I have those levels on top of my head already. So Bitcoin extremely bullish. I think we have got the run up. Wave one could count as complete now, so there's potential wave two pullback out of this broader, larger degree wave three. I have eliminated the wave four alternative path that I had on the chart before. So I do think we probably have bottom here already. And if you just zoom out slightly, there's probably a reverse head and shoulders if you don't use ideal wave. And wave three target is 84,000. And we're in the heart of wave three, circle three of three. And of course, it's always nice to break above this this point here, and obviously the previous wave three high from March. It's been quite a long consolidation, nearly actually over 6 months now. So I think once it breaks above those previous resistance, we are just really taking off from here. We get wave three and wave four retest of this previous high, and then wave five above 90,000. Ethereum is a new coverage from this week on the back of my article. I entered the trade actually on the day of writing the article. When I analyzed the trade, I think we are already probably underway for wave five. We can, and so this is a medium-term trade, right? We're not playing the micro, wave 1, 2, 3, 5 in the smaller degrees. So the upside is 120%, and the downside is about 20%. So that's the previous wave four low. If we break below this wave four low, we can get maybe down to 1900, which would be extra 10% loss from this stop loss. So I think it's up to you individually, whether you think, having a stop all the way here, which would be like something like 25% or to 30% from entry, it's still good risk reward, right? So you can budget for lower, because with crypto, a lot of things can happen in the near term. So I don't mind a smaller position with a wider stop loss to not be taken out randomly, just on random volatile days. So the key point argument that I did make in my article is that in the very short term, Ethereum and Bitcoin are closely linked together in terms of daily moves. Ethereum is a bit more volatile recently than Bitcoin, but I think most of the flow has aggregated towards Bitcoin, especially with multiple ETF launches at the beginning of the year. But with the rate cuts, it should be helpful for both Bitcoin and Ether. In the very long run, I do believe that in terms of store of value, Bitcoin should be the top choice. ETH should be the backup choice in case the Bitcoin network fails somehow. This is because I think generally investors like to kind of congregate towards one type of asset for the purpose of store of value. In the precious metals case, is gold. Silver was overtaken at the beginning of last century and the world moved towards a gold standard, which then became a fiat standard. So gold and fiat money decoupled. With Bitcoin and Ethereum, I think Bitcoin is regarded as the digital gold, the long-term store of value. It has a fixed supply that everyone knows about. Whereas Ethereum is more linked with the intrinsic worth of its network, the Ethereum network, the smart contract applications across dApps and DeFi. And it doesn't have a hard cap in terms of supply, unlike Bitcoin. It is, well, but the mechanism is not that inflationary because some of the gas fees gets burnt, and so the supply does shrink. If the gas fees that are burnt outstrip the block rewards you get from validating a new block. So I think overall, they are different. Maybe in the short term, investors don't kind of distill the two too much, especially now CFTC has ruled ETH to be a commodity. But in my mind, there is a distinction between the two. And I think in the very long run, the ratio between Bitcoin and Ethereum is likely to widen. Coming up to gold, I do think not that much has happened since the beginning of the week. I do think we have topped in the near term with the wave 3, with a wave bracket 5 or 5 or 3. And I'm just waiting for 3 waves down to confirm that wave 4 is underway. So with SLV, I think we're pushing towards this target, wave 3 target at 30.5. But we have enough to, so it should look like this. But we have enough to say maybe this is finishing soon. It's just the 30.5 target is just in between 1.382 and 1.618 extension of wave 1. So I do think there's a bit more room. If you're prudent, you should be up quite decent from our entry at 26. So it really depends on individual risk tolerance, whether you want to take some profit now and wait for the retrace with gold, or you just wanted to at least reach above 30. With Apple, not too much has happened since the beginning of the week. I still think we're in the wave B, but obviously, because of the way this has gone up not in a very direct 5-wave fashion. So my expectation is a near-term pullback, and then up we go towards 300, and that coincides with the timing of Apple Intelligence launch, which is towards the end of the year. But breaking above this wave A high could confirm that actually the red path, which is alternative path, wave 3 target is underway already. And obviously breaking below this wave A low is confirms we're in a deeper retrace territory. So overall direction, I still think we're up. To the near term, I do think that we have headwinds going to next month. But at least you have the levels to say, okay, at which point is my assumption wrong, which is actually not that far away. Amazon has started turning down now. Hasn't been a big pullback. I'm still hoping for this wave 2 pullback. I might have missed it, and this level could have gone up. Actually, if I'm just revising this on the line, so wave 2 might not be as deep as the retracement down to 161. We could easily get something like over here. And it's still decent risk reward if we move up the entry level to 167-ish. and that will give us a higher target, at least in wave 3, uh, which we would expect to be above 230. So, so yes, so the entry and the target have both been moved up. I'm still keeping the same stop loss because it's still the best place I can find for stopping out. I would probably just put it slightly below this, actually, just because there will be stop loss hunters and if the market breaks below this low, it likely capitulates a couple of points below. So it's probably not good to be so close to the previous low. For Google, breaking above this would be high could invalidate my thesis bearish path, and we can remap whether this is a 1-2 and going towards wave 3. But right now, I still see the market action to be primarily in the downtrend. Meta pushing new high, and not much to say here. I think we can remove this trade setup now because it's so far away from the target. Most likely waiting for wave 3 to complete, then a wave 4 pullback, then targeting wave 5. The risk is that because the wave 1 and 2 has been quite steep, so proportionally speaking, wave 4 could be much shallower when it comes to retrace. Microsoft, again, not much happened. 1, 2, 3 waves, 3 waves up. It's likely a B wave right now, but if we get a 5 waves up, saying this is 1, 2, and then 3, 4, 5, obviously it would invalidate our thesis. We can look at our entry and target level, but right now my primary direction is still a wave C down from here. NVDA, again, the bullish action from early in the week has not broken above the wave B wave high. So, and this wave 2 up, if you look at it, it's still a 1, 2, 3 wave up. It's not a 5 wave up action. And now, even if it's like part of wave 5, this has come down below this the wave 1 top, as it were. So I do think we had an ABC correction early in the week, and now we're heading towards wave 3. It's not that I'm trying to be permanently bearish or anything. It's just looking at the patterns of the rally versus the patterns of the fall. So we have 5 waves up and 5 waves down from here and 3 waves up. And now we have another 3 wave up from here. That's not a bullish construction. And I would say that the key term here, the key area here to watch is essentially this zone here where it's acted as a support, resistance for this wave 3, and then support for this A wave. So once we enter, once we get to wave 3, we definitely know for sure the primary trend is actually still down, and we likely get a wave 4 bounce into this area and then falling down towards mid-70s. Again, going above this wave B high would invalidate the thesis. Finally, Tesla had very, very bullish so far. So I think wave 1 is likely to have completed out of the large wave 3. I'm essentially waiting for this entry here at 228 or 230, targeting just sub 400. So I do think that will provide a very decent risk reward. If we look at this trade setup here. So I'm a bit more inclined to play a medium to long-term trade with Tesla because the short term is pretty volatile and tricky to get all the subwaves right in real time. So I think with Tesla and with crypto, actually, with volatile assets, it's better to get the long-term direction right and just play a smaller position long-term trade than trying to get every single detail of the short-term moves absolutely spot on all the time, which is pretty much impossible. And finally, let's go into a couple of new charts that we've updated since this week. So the first one is KWEB, which is the China Internet ETF. So it does look like it's moving towards that wave 3 target of 48. And with so China injected liquidity and cut rates this week. The local stock market has been up and up, I think, up more than 10-15% in just 1 week. And we're now above this wave 1 high. So I think it's overall the direction is very bullish. Ideally we still want to break above this wave circle 1 high from here to invalidate the alternative path, bearish path of wave 4. So I think there isn't a trade setup per se right now. I would wait for a pullback here, possibly towards the year end, or maybe this will move in line with the US equities pullback in the next move. So I wouldn't chase right now. So I wouldn't chase right now. I'll wait for a pullback, and then I would target the wave 3 target of 48. And I think breaking below 23 would be very bearish. And actually 23 to 22 to 33 here is almost 50%, well, it's a 30% drop. So of course that would be very bearish on its own without the technical analysis part. And finally, I was asked about US oil. So I think what we need to watch for is, I think my primary path is up. We've completed wave 1 and wave 2, wave 3, and I think we're in a wave 4 correction. So wave 3 is a 2 extension of wave 1. Wave 4 is just below 1.382, which is pretty standard levels for the wave 3 and 4. And I think wave 5 should be at least 2.61 extension around just above 140. But we're still in this large channel here. It might take a while for us to break out either way. And I think if we break below this, we're probably in a much more bearish territory. And this is because in this wave, this is because we could have had 1, 2, 3, 4, and wave 5 over here topping at the 2 extension already. And if that is the case, it's not my primary expectation, but if that is the case, then this retrace here doesn't look steep enough. It looks like a very shallow retrace of the overall move. So I would expect something like A, B, C down to the 50% zone of the entire move. So let me just write this out. B, see something like between 50 and between those two levels, 39 and 48. I'll just label those as alternative path. again, it's not my main expectation, but if we break below this channel support, then it is definitely a very valid thesis. In that case, I would expect inflation to come down, and we're probably in a recession, global recession, and a lot of stocks are probably going to fall with it at the same time. All right. So I think that's it for today. So thank you for watching this market update. First time doing it, also it's a recording. But if you have any questions, please just ping me in Slack, and I will either answer directly, and if it's too fiddly to answer in written sentences, I will address it in the video next week. Happy Friday and happy weekend. Thank you.